Hi, I'm Garth from traderscorner.co.za. This week, I'm taking a look at the US Treasuries. We're going to look at the 10-year Treasury yield and also the 30-year Treasury yield to see the technical developments that have been happening there. And we'll also look at an ETF that one can look to possibly trade what we're seeing on the technicals of these two Treasuries. So we start with a look at the 10-year Treasury yield in the US. And what's evident here is that the yields have been rising since August of last year, but they've flatlined for the last 3 months or so. And this past week, something quite significant has happened in that the 10-year Treasury yield has dropped down below 1.55%. And that's quite a significant technical support level for that yield. And the fact that it's broken down below that level suggests that maybe we've seen a short-term peak in yields for now, and that one might expect to see yields coming a little bit lower in the near term. This is interesting from an inflationary perspective because inflation is a big buzzword in the markets at the moment, and much expectation for higher inflation. And certainly at the moment, there is evidence of higher inflation in the US. But the Fed has always held the line that this is just going to be transitory and that ultimately inflation will settle down after a little while. And this is possibly the first indication we're seeing on these Treasury yields now, which suggests that perhaps that line that the Fed is taking is actually correct, and that we're starting to see the bond market pricing in transitory inflation as opposed to more extended inflation. So if that 10-year Treasury yield stays below 1.55%, then that does suggest that we might actually see bond yields coming a little bit lower. And remember that when bond yields come down, that means bond prices move higher. Now let's then take a look at the 30-year Treasury yield. And here you can see a very similar technical setup. Here, the upward trend from August last year has also been broken to the downside. But what is significant in the past week is the fact that the price has now, or the yield rather, has broken down below 2.2%. And that's a technically significant support level on that chart and points to the possibility that we may now see the 30-year Treasury yield coming lower as well. So very much a similar setup there on the 10-year Treasury yield and on the 30-year Treasury yield, both exhibiting very similar technical patterns. Now let's take a look at the iShares 20-year Treasury Bond ETF. The code for this is TLT, and it's a very popular and well-known way to trade the bond market via an equity-listed ETF on the New York Stock Exchange. And what's evident here is that effectively this is the inverse of the yield, is what we were just looking at in the previous two charts. We saw the yield breaking down, but what that implies is that the price then is breaking up. With this ETF, the break above $140 per share here is technically quite significant. And that's a bullish break to the upside, which suggests that we're quite likely to see further gains for this ETF. You can see a cup and handle pattern that's been forming there over the last 3 months. The break above $140 here validates that cup and handle pattern. And that projects up to a move at about $147.50, maybe a little bit higher. So I think for now, whilst this Treasury ETF, the TLT, is above $140, one's got to give the bullish bias the benefit of the doubt. And the way we'd look to trade this is to buy this TLT ETF around the current area, look for a move up towards $147.50, maybe $148, and one would probably put a stop loss somewhere around about $138 on this ETF. That's all I've got for you this week. I'll be back again next week with some more market analysis.